want to bring in Joe Moglia. He is the former TD Ameritrade CEO and chairman, of course, the former Coastal Carolina University head football coach. And Joe, it's always good to see you.
Happy to be here.
All right, so these are some weird times in the markets. I want to talk to you about everything you're seeing out there right now. All these questions about stability in the banks, whether it's spreads, whether we've made it through some of the toughest parts. What do you think? You know this industry so well for so long.
I think, first of all, as far as stability in the banks go, I think the big deal is the confidence and the faith in the banking industry itself. So I think that when we had the issues on the West Coast, I think the government did a good job of coming in and not bailing anybody out, trying to help out where they could, but making sure the individual depositors, whether they're small businesses or whether they were individuals, were protected. I think we still need a little clarity about that going forward, but I think we'll wind up getting that. I don't think there's anything anywhere near what we had in 2008 with regard to the financial crisis. I also think there are some things here that are positive that have come out of this in terms of education of the client base. So people today, I think, are doing a much better job they're much more FDIC savvy. That wasn't the case a little while ago. They're much more conscious of the yield they're actually getting on their deposits, so the cash sorting concept. And I think even from the banking perspective, if you think back to when we had the meme stocks and the blow up with Melnick, what the institutional investor learned then is that the retail investor, if they're doing their homework, can hurt you if your short's too big. Well, frankly, for a bank not to be as on top of what they need to be with regard to risk management is stupid. It's stupid. So I think they certainly recognize now, no matter whatever else they may have going on, their ability to be able to match assets and liabilities is a critical part of what they've got to do going forward. So I think there are some pluses out of this. I'm not saying these are good things that have happened, but these are some of the pluses, I think, that come out of the bad news.
I even just wonder some of the negatives on all of that. The pluses that you mentioned could also be the negatives. The idea that people can move their money so quickly, they can look at them not getting the deposit rate that they wanted and realizing I can get better over here and moving things so quickly. I mean, that changed. That kind of created this whole emergency to begin with.
I agree. But I think that's technology. That's part of the plus and the minus to being as technologically advanced as what we are. So if you think back to the Great Depression, when we had a run on the bank, well, the only way you got your money out of the bank, you had to go to the bank. So if you remember the videos from the Great Depression, you have lines and lines, blocks and blocks and blocks of people waiting to get into the bank to get their money. That could take days and days and days. And with SVB, within 4 hours, $42 billion were gone. We're gone. So there is a disadvantage there, I agree. But that's also part of the price you pay by the significant advancements we made from a technological perspective, I think.